traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Monday, the 12th of July, and this is the Daily Report. Forex Gold is currently trading under pressure, about $10 lower on the day at 1198.80. It has broken and has been trading right around what I consider to be that critical $1,200 mark. The interesting thing that I am noticing is that we have absolutely a choppy or consolidating market. If we look at the last 5 trading sessions, we have had a black candle, meaning a lower close, a higher close, a lower close, a higher close, and a lower close. In other words, we have absolutely an alternating cycle. I am looking at this market because of a lack of any kind of fresh fundamental news to stay flat to under pressure as we continue in this corrective phase. Of course, aggressive traders, we did place and trail our stop up tightly to 1198. That stop was hit. My sentiment was I'd rather have this be a very low risk trade, taking away approximately $5 on the trade. And conservative traders, we have remained flat throughout this consolidation period. We never got confirmation in any case. Now, the market does appear as though it is moving off of these lows. However, I am not convinced that this first A wave in our corrective phase is over. We have not gotten any indication to really have us believe that to be the case. Now, one of the things that I am finding quite interesting in the marketplace today is traders, if you recall, back about a month ago, the US dollar and gold were both moving pretty much in tandem. In other words, for the first time in a decade, we witnessed a long-standing correlation, which was an inverse correlation, meaning as the dollar rose, gold went down. In other words, a flight to quality. If it went to the US dollar, it took away from gold. If it went to gold, it took away from the dollar. That particular correlation had pretty much faded. And for the first time, as I said, in over a decade, what we were really witnessing was, as there was a flight to quality, that flight to quality was there not only with US dollars, but also in gold. We are returning, at least based on the fundamental news that's out there, to that direct inverse correlation. I'm quoting now from the Watch, and it says Market Watch. It says the gold futures ended below $1,200 an ounce on Monday, as the dollar rose and investors seemed to be in no hurry to snap up bullion, even at recent bargain prices. Traders, this market is absolutely fundamentally driven, and with the lack of fundamental news, what is happening is we have less of safe haven buying the dip, and bargain hunting. We are in that corrective phase right now that I think personally will take the market to one more area. If it is a flat correction, it should move up from here and then back down. If it is a standard zigzag correction, as I said, I would look for it to move down to about the 1164. However, with a lack of any kind of fundamental news, the absolute area in which it could move to as it corrects could actually be lower than that. However, right now I do believe that those are the two areas that I'm pretty comfortable at in terms of looking for the market to move to in its corrective phase before it re-enters what we call the impulse phase. The one thing that I do want to say is that fundamentally there is a lack of news, no doubt. If we look at some of the raw data out there, what you'll notice is that we are having a drying up of interest currently in the market. And let me quote Gold rose 1.2% Friday, closing at $12.09 an ounce, having ended the session below 1200 in the past 3 sessions. It goes on to say that the U.S. Commodity Futures Trading Commission reported that positions in COMEX Gold held by non-commercial investors posted their largest weekly drop since July in 2007. And Barclays wrote in a note to their clients that long positions fell by 35,700 lots to a total of 209,000 lots for the week ending July 6th. The other thing that is worth noting is that the world's largest backed EFT, which is the Spider Gold Trust, reported an outflow of 1.5 metric tons on Friday, amounting to a reduction of 6 metric tons to date. That's a huge move when you consider those 3 areas that have kind of moved out of gold. And so that what we are seeing is that although gold has lost some of that luster, my belief is that the fundamental conditions underlying what brought this market to rally the way that it has is still sitting in the background. And my belief is, although we are going through a standard corrective phase, and this is what happens during a corrective phase, you get less interest in the market, you get a lack of news. My feeling is that anything can heat this market back up again, and it's a matter of running its corrective course before that actually happens. Long-term traders, I am still bullish on this market. I believe it's going through a normal corrective phase. This has been Gary Wagner with WFGForex.com, daily market update for Forex Gold. Wishing you, as always, good trading. We'll talk to you tomorrow on Tuesday. Bye-bye.
When I look out my window, many sights to see.